I joined AVI in 2002, that's 17 years ago, and I worked closely with the founder researching European investment holding companies. Over the years, my research coverage has expanded, and in 2013 I became the joint manager of British Empire Trust, and in 2015 I became the sole manager and the chief investment officer of AVI. Well, the investment objective is to invest in a portfolio of global equities in order to achieve capital growth. Where we differ from most of our peers is that we are focusing on a universe made up of companies trading at discounts to net asset value. And that means we're focusing on three broad categories of company. We focus on family-controlled holding companies, we focus on closed-end funds, and we also focus on other asset-backed situations. So these types of company are all listed, and they tend to own portfolios of businesses of assets, both listed and unlisted. And for us, the interesting opportunity arises from the fact that these structures trade at discounts to net asset value, and they're a cheaper way of getting exposure to those underlying businesses. Well, British Empire Trust was established in 1889, and back then it was called the Transvaal Mortgage and Loan Finance Company. And its objective was to go and prospect for diamonds in the Transvaal. It expanded its activities to other parts of the historic British Empire, to Australia, for example. But in 1969 it got renamed the British Empire Securities and General Trust PLC, and in 1985 AVI took over as manager of the investment trust and built a portfolio of global equities. So today the activity of the trust is very different to that when it was established or when it became known as British Empire Trust back in 1969. And the name change to AVI Global Investment Trust more closely resembles and articulates what the trust's activities are. We are trying to encourage investors to buy the trust. We're trying to ensure that the trust trades on a narrow discount, and the board felt that having a name that more appropriately represents what we're trying to do would help achieve those objectives. We're very positive for the prospects of the companies in our portfolio over the next 12 months. During the course of 2018, we saw discounts widen quite substantially across all areas in our portfolio. So for example, in family-controlled holding companies, we own a group of companies with very high quality assets, with very strong balance sheets, and which are trading at abnormally wide discounts today. In closed-end funds, we're seeing very interesting opportunities where there's the potential for corporate activity and shareholder activism to unlock a lot of value and narrow discounts substantially. And in Japan, where the trust has over 20% of its assets invested, we're seeing remarkably cheap companies, and there's a change underway in Japan in terms of corporate governance that is likely to see that undervaluation reverse over time. So all in all, we're pretty excited about the prospects. We're fully invested, we're slightly geared at the moment, and I think there's strong potential for substantial growth.